The story yesterday, and always there has to be a story, maybe in the somewhat slowness of December, is when smart people write an essay. This is what we heard from Kevin Warsh, the former Fed governor, writing with Stanley Druckenmiller. People care much more about the Duquesne family chairman than just about investment, just about hedge funds. Here is Mr. Druckenmiller on Chairman Powell.
I think the air can be let out of this balloon without causing another financial crisis. I think it's possible. But it's hard to believe, at least markets will not have struggling returns the next 3 to 5 years.
Possible, but how difficult?
Oh, very difficult, which is why I didn't like the so-called insurance policy of QE3 to get escape velocity in the first place.
So possible, difficult, and with poor returns. How poor?
Oh, I could see the S&P returning between 0 and 5% annually the next 5 years. But Eric, one of the strengths of my investment returns over time was being open-minded. And, you know, I'm just throwing out answers to something that, as my wife and others will tell you, you know, he believes something on Monday and 2 weeks later, he changes his mind. But,
well, are we in a bear market now?
Well, of course we are. We've been in a global bear market for about a year now. And for those, by the way, who say there's no correlation between the economy and the stock market, I'll just point out that the DAX and the China market peaked in January, and I don't know whether anybody's seen their economic data lately, but I'm not even talking about the inside of their stock markets. I don't think it's clear-cut to me, which a lot of people say, that this is a correction in a secular bull market. Because we had free money for 8 or 9 years, because we had a debt buildup, because I'm sure we had malinvestment, this could take 3 to 5 years either sideways or a big down with something else. But yeah, I think the highest probability is we struggle going forward.
And the bottom may be a ways away still.
Maybe, or it could be right here, and we're just talking about sideways for quite a while. Mm-hmm. I mean, I will say this in terms of the current market. We've done a lot of de-risking. I went short the market in July because I saw QT coming, and I lost my butt in July and August because I was 3 months early. You can't think ahead in this market.
Stanley Druckenmiller there with our Eric Schatzker, really talking about that investment application of what we see with Fed policy. What we want to do at Bloomberg Surveillance is drive forward the conversation, and we can do that with somebody who is wonderfully holistic, legendary at Steve Roach's Morgan Stanley. Joachim Fels holds court at Pimco, is their global economic advisor. We'll look to their 2019 view in a minute. Joachim, over here on camera 3, if you would. There you go. Joachim Fels, good morning. Francine and I say good morning to you. You've always had phrases that matter. With this Fed now, what's your phrase for the Powell Fed?
Well, I think the phrase for the Powell Fed is that they are getting closer to a pause. So, and we're also in an environment where I think we're still in rookie season. And I'm quoting Ben Bernanke here, who in his memoirs wrote about his own rookie season in 2006 when he had just become chairman. And when he first uttered the phrase pause, markets rallied and assumed that the next move would be down. And I think this is exactly the problem that Jay Powell may now be facing. If the Fed starts to talk more about the pause that is likely to come, then markets will assume that we're done with rate hikes and that the next move will be down, and that could lead to quite some volatility.
Within the essay of Mr. Druckenmiller and of Mr. Warsh, what permeated it was a global outlook, a central bank to the world. You had Chairman Bernanke out at your annual meeting. You've had other advisors over the year that are Fed-like. Is this a central bank that is truly the world's central bank?
Well, yes, clearly the Fed is the world central bank. There's loads of dollar debt out there, dollar liquidity in the world. The Fed is driving the global cycle. We saw this earlier this year when the Fed started to run down its balance sheet, kept hiking interest rates, and the first reaction was that foreign stocks went down and that emerging markets got more volatile. So the Fed is clearly the world central bank. The problem is its mandate is a national one. So the Fed is always a little bit reluctant to accept that role. But de facto, the Fed has that role.